And good morning on a Monday morning, 8/31/2020, last day of August, in what has been a very, very good month for stock prices. In fact, I think Cody was telling me before the show, maybe the best month in about 36 years on the market. We're going to break it all down here today. It's Tackle Trading's halftime report. It's our daily show that we go live each and every day here whenever the markets are open on YouTube and break down the stock market, options, commodities, Forex, futures, anything on our mind, including economics, corporate news, pretty much anything that can impact the market, and kind of bring it out to you guys out there to help you with your daily routine. If you are a veteran of our channel and in our community, welcome back. As always, hashtag Team Tackle in the chat. If you are brand new, very, very simple thing. Click subscribe, click the bell, come back and join us every day as we break down the markets. I got the crew here today. We got Matt, we got Mark, we got Cody, and myself, Coach Tim. Matt, let's start with you. How you doing, sir?
I'm doing good, Tim. Excited to be here with the crew and break down some fairly limited news over the weekend, but get people ready for the market this week, and prepared from an economic perspective, earnings perspective, and just overall hang out with the crew. I always enjoy just hanging out with the crew.
I like the hang as well, for sure. In fact, I enjoy the chat, watching it, going back and forth. A lot of Team Tackle members out there, come in, and they're just a part of the conversation. So we do encourage that and look forward to it. Marky, I want to get your take on something here to start actually our show. Light news weekend, quite frankly. That's okay. I mean, market days don't all have to be fireworks shows, right? How do you approach a Monday when you're dojing like this with light news?
Well, I mean, it's individual set. Dojis in uptrends are not necessarily a bad thing, especially for a stock picker market. Yes, it makes it that everything isn't going up, right? But if for example, if you were to doji every day this week, that doesn't mean every stock's going to doji. Technical patterns with really good patterns that have breakouts tend to do all right in that environment. Trends still up. So sideways action in the broad market does not necessarily mean a bad trading environment. In fact, it can be a really good trading environment for individual stock picks.
Mm-hmm. And Mark, we have had an incredible run here, obviously above those 9, above the 20, above the moving average in general, just trending here on the S&P. That breakout at 3,400, I mean, it doesn't look like much, but it ran another 100 points there in about 6 days, obviously. And we've had good stretches like this. Do you feel like the market's set up for a continued trend? Maybe it needs a little bit of a consolidation to catch up with those MAs. Are you approaching it bullish the way you have throughout the month of August?
Well, I mean, you have to. I mean, you look at the breakout that occurred at the start of the month, where you had a clear resistance level, it broke up, had a really nice 5-day stretch, and then what did it do? Kind of drifted sideways for 6-7 trading sessions. Maybe even like 10 trading sessions, this slow drift up, and then had a strong breakout. So that's just normal price action in an uptrend. I mean, we're still 24 or 25 days above the 9 now. Don't try to guess when that bad boy is going to end. Just find your individual stock picks that are great. Trading sideways is very, very healthy in an uptrend. Yeah, very, very healthy in an uptrend.
Maddie, come back on in here if you can for a second, and let's get a technical read on this chart if we can, kind of daily, weekly, starting the week. I always like to do that, multiple time frame analysis, look at the big picture, go down to the intraday. I know it's a doji here today, Matt, but what are you seeing here in the broad market on the chart?
Well, obviously you're bullish in the market, and if you're reading the Tackle newsletter, we did bump up the market with the breakout of 3,400. We did bump up the market to that positive 20, which is right there in the slightly bullish to bullish range, which is a fairly aggressive ranking when you're dealing with the overall broad market. A lot of times when you're dealing with an individual stock, you can see like peak euphoria, you're +3, extremely bullish. Take Tesla, take Apple, for example, and obviously we'll get into those splits today here in just 1 second. But in the marketplace, you typically don't want to see those types of extremely bullish type euphoria. You want to be a little bit more conservative. You want to be a little bit more cautious, because Mark's absolutely right. Even though you might have a doji today in the market, doesn't mean you're not seeing individual companies just fly, right? Individual companies can literally just go, just gangbusters, to the bullish or the bearish side of the equation. But in the broad market, when you're dealing with thousands of stocks, 500 in the S&P, 100 in the NASDAQ, 30 in the Dow, 2,000 in the Russell, 6,000 stocks, smaller mid cap or above in the market, you're talking about the entire broad market base. And so you really don't want to get that aggressively bullish or aggressively bearish whenever we see that. And so bumping it up 5 into that positive 20 does respect, the breakout of that 3,400 that we saw. And it also respects the fact that even though we are, fairly bullish in the market, you're also a little bit overextended right now. And so when you're looking at this just from a breakout perspective or a potential continuation of the movement we saw after it did break out of that 3,400 range, the last time you broke out here, you ran from 32.77 to the top right there at about 33.92. So on that breakout, you ran a good 120 points on that breakout. Is my math right? 32 to, yep, about 120 points. On the previous breakout, you ran from 31.80 all the way up to about 32.80. So you ran 100 points.
Mm-hmm.
In this breakout, what you ran from 3,400 to 3,500. And so if you're thinking about how far this can run without some degree of, pullback, and a pullback in this market is a 2-day retracement flag-based pattern into the rising 9, or you see some consolidation like we saw when it pinged to 3,400 and then it consolidated over that next week and a half between 33.50 and 3,400. And so you're at that top end of the range from a technical perspective. And so you want to be a little cautious in the broad market, just given the fact that you're already made that fairly significant movement. When we broke out last Monday, saw the continuation Tuesday, Wednesday, and coming into that 3,500 level. And we've talked about this, in previous breakouts, but this market really does love its significant whole numbers, especially as you're starting to break out of all-time highs and there's really no historical evidence at those levels where it's going to go to. A lot of times it's going to ping to those significant whole numbers. And so it doesn't surprise me that, right there as you're a little bit overextended in the market, it had a fantastic week last week. And so it doesn't surprise me that, on a weekend where there wasn't a lot of news, guys. I mean, yeah, we're going to talk a little bit about some geopolitical situations, the new regulations China has that may block the ByteDance TikTok deal. I want to emphasize might, hypothetical.
Yeah.
We just don't know yet. We don't know the intentions of China. We're going to talk about Buffett buying all of Japan, like literally the entire country here.
Well, it's easy to want to buy something when they sweeten the pot, Matt.
Oh,
I mean,
I
he
can't
gets,
imagine the
yeah.
deal he got. If I were to speculate, I would say he got a better deal than the deal he got by buying Bank of America and Goldman Sachs, 11 years ago. I would say he got a sweetheart deal from Japan, but he basically bought all of Japan. So we're going to talk about those, but those really were not major market moves. I mean, China, maybe not block the ByteDance TikTok deal. Again, pure speculation because it hasn't been actually reported in the news. Buffett, all of these are just, human interest stories more than anything else in terms of real market activity. And so there wasn't a lot of news coming into the weekend. Over the weekend, you're overextended in the market from the daily chart. So I'm not surprised that, we're a little bit hesitating here in the marketplace. And I think this is a good thing. When you get overextended in the marketplace in the short term, it's very difficult for traders that have experience to be like, okay, I can map out some probability here, or I can map out a positive return versus risk ratio. And so unless you're just doing the momentum, chase the dragon, and don't care about ultimate risk, it becomes difficult for standardized technical traders when you're overextended. And so a little bit of hesitation, a little bit of consolidation, letting that 9 EMA catch up to it, because I mean, when you're looking at the momentum in the short term, guys, you got to love what you're seeing in the short term. You see this momentum start to build. Look at the extension you have from the 9 EMA. That is something you have not seen since the economy reopening up theme. It really has. It's been more of that, what do we call that? The worm burn? right? It's
Mhm.
been far more that worm berm holding that 9 EMA. You're now starting to see momentum start to separate itself. And so it's a really positive thing from a bullish perspective, but it's also in the last week, but it's also now overextended. And I think you got to be a little cautious, wait a little bit, let that 9 EMA catch up to it before you get, back into the mode of let's go out there and be aggressive. And that doesn't mean there's not areas of the market, even with the market being overextended, that aren't overextended, right? We've
Mhm.
been talking about this little swing trader sector rotation model for the last few months. And so there's going to be really, really good plays. You take the AMD breakout, for example. And remember what I said last week, guys.
You
What
don't
I say
wanna
last
miss
week about AMD.
you don't want to miss it.
You don't miss AMD breakouts. And so because when AMD breaks out, AMD loves to fly. It just does. It has a history of breakout and running, unlike other companies. Many companies have a history of breakout, fake out, breakout, fake out, breakout, fake out. So they do that little two-step dance between the breakout and the fake out. That's not AMD. And so my point is not just a scoreboard on AMD here. My point is that even with the market overextended, it doesn't mean every stock is overextended. And so you look at this AMD chart, for example, look at the RSI. You were underneath 70. You were crossing up with a very good momentum based indicator in our not momentum based, but seeing the momentum start to pick up, even though AMD was consolidating. Look at AMD, even in the consolidation here. You start to break out of that high right there, 52 on RSI. You start to see the momentum pick up, even in the last 3 days of consolidation. That is screaming by the breakout. That is screaming by that breakout. And so you got your confirmation from a secondary indicator perspective. You have your cup and handle pattern coming into it. This is a very, very, very clean chart and should be traded. Now, do you chase it already up 6.5% on the day? Most likely not. But if you were watching the halftime report last week and you listen to the you don't miss AMD breakout conversation we had, that's a wonderful, wonderful trigger. So there's spots to play here. But overall, coming back to the broad market, I think you just got to be a little bit cautious with how aggressive you are with how many trades you take. And so if you're nailing the Zoom breakout, or you're waiting for the Apple breakout, or you nailed the AMD breakout, you might just say, okay, I have my 3 to 4 breakout trades. Maybe I don't push all the chips to the middle because we're overextended in the market and we need to wait for a little bit of a better short-term technical pattern. And in this market, that is waiting for that 9 EMA to catch up to it, and then waiting for the breakout once that 9 EMA catches up to it. Kind of very similar type discussion that we had during this consolidation phase, when we're like, okay, we don't want to miss the breakout, wait for that 9 EMA to catch up. It did. We broke out, we flew. Same type of conversation here. Now, looking at it on a different time frame, because you asked me to kind of break it down from a multiple time frame perspective, this weekly chart it's been overextended for a while, but that breakout of that all-time high of 3,400 after a couple of weeks of consolidation, that to me was very, very strong, especially when you couple that with a little bit of a longer term perspective, on that monthly chart. We talked about this in last week as well. When you're looking at this on that monthly chart, guys, and you're looking at kind of those breakouts on those monthly charts, that's a strong breakout. I know if we take a look, okay, but what about what happened in March? What about the pandemic? What about the recession? What about this? What about that? What about this? Okay, yes, I get it that it can throw emotion into the equation, but if you just look at this from a technical perspective and you compare this against the other type of market crashes we had, we all felt coming into this, Tim, you've heard me say this many, many, many times. We don't know what that next recession looks like. We just know it's going to be a hell of a lot faster
Mhm.
than in the previous type of economic contractions. And so when you're looking at this from a longer term perspective, and and I'm not saying we're out of the woodworks here yet, guys. I'm just saying when you're looking at this over, say, the last major contraction we had on major contractions we had on that monthly chart here, you're looking at the .com level that went down. I think it was what, 49% in the S&P 500, and you went down over a 2.5-year time period. Well, subprime goes down about 57%, and you're down over about a year time period. And so what you're seeing over time from just a technical perspective, and a lot of this is built on algorithms, is .com crash lasted about 2.5 years. Subprime crash lasted about 11 to 12 months. And then when we saw the pandemic COVID type recession, which is not, to me, it's COVID just unmask some of the underlying economic problems with, Fed policy and fiscal policy that have been dominant over the last 12 years. But when you're just looking at it from a price perspective, the market went down 37% over 2 months. And so looking at this on a monthly perspective, discounting the economic situation we're going through right now, you got to love what you're seeing on that monthly breakout.
I agree 100%. I mean, there's several different points I want to talk about that you brought up there. Number one, the speed and the veracity of the potential sell-off. I mean, this is not something to overly concern yourself with on a daily basis while the markets are dojing up, obviously. But I think from an investment strategic perspective, Matt, people got to understand this concept.
And so, sorry, that was me.
No, it's okay. People have to understand the violence and the swiftness and the volatility that can happen when markets turn. This is why leverage and money management and portfolio design and hedges, even when you're bullish, are generally what the veterans talk about while the young kids just scream about how much money they're making all the time. Education is really important. Yeah, trade what you see. These breakouts have been clean, and there's tons of opportunities in the market. I mean, you brought up AMD. I mean, I was even just looking across some big names like Amazon and UPS and Apple Computer. Some of the other stocks that are up here today, a lot of tech names are still looking very, very good from that perspective on the S&P 500. Mark, as we talk about markets here, we talk about multiple time frame analysis. One of the things you brought up here this morning was just, you have this general instinct of caution right now while you're still trading bullish. Is that just a message you're trying to get across to beginners? Is that something that
it's what I'm doing in my own real life, and you share it. Like, I'm a big believer in whatever you do, trading strategies, what you do. I mean, that's what you should also teach, because I think it helps give somebody not a blueprint of what they should do, but just the insight into a trader's mind. It's one of the benefits pro members have at Tackle Trading, is they get to hear Noah's mind and Matt's mind and your mind and Gino's mind and Tyler's mind and Greg's mind and Marquis' mind and Cody's mind. And they get to hear the thoughts, the perspectives, how they approach, and they get all of these different perspectives, and then they can formulate their own trading plan and how they're going to approach the market. I think it is one of the great we are not a hive mindset of coaches, right? We're not, like the Borg in Star Trek. We are Borg at Tackle Trading.
Every coach, Mark, has their own take on things, and at no point will anybody ever curtail that. I like the independence that the coaches have to speak their mind, because we all see things a little bit differently. We all have different perspectives. We all, have different trading styles, and I think it's a beautiful thing, especially once you really kind of set in, 10 different Noah classes or 10 different Gino classes or 10 different Mark classes or whatever the case. You see the different perspectives, in the marketplace. And I know for me, it really helps me when we're in the scouting report meeting and I'm just listening to the coaches and how they approach the markets and what they're seeing, because guys, I hate people who surround themselves with yes people. Like, it drives me absolutely nuts. I want to surround myself with people that have their own passions, their own visions, their own perspectives, and are willing to speak about what they're seeing, because none of us can navigate this market by ourselves. It's too big. There's too much information out there. There's too much news out there. And so being able to sit down and listen to Noah or Tyler or Gino or yourself or Tim kind of just openly talk about how they see and approach the market. I know, and I can only speak for myself, I know it helps my solidify what I'm seeing in the market, or makes me think about things that I'm maybe not seeing in the market. Because again, we all have our internal biases. Every single one of us do. And so being able to listen to those individuals from their perspective, people I trust and know, it's very, very powerful for me personally, so that I can solidify kind of my own personal take on things.
No,
Yeah.
and I mean, and so yeah, I mean, you have to trade a trend, right? That is like, if you don't trade a trend, it's going to be a long trading career that probably not going to work out for you, right? So you have to take advantage of trends. But man, I also just think you have to be really, really cautious and not be over leveraged and not have a billion trades out right now. I mean, Matt's favorite indicator, the VIX, it's been rising the last couple of weeks during this ferocious market.
In fact, I got a question on the VIX, guys, that I'd like to get your very in-depth and experienced take on.
Hold on. Did Mark just bring that up to trigger Matt?
No. I think it's very pertinent right now.
This is your Monday morning gimmick,
listen,
though. I mean, it's like
no. I can't. I'm in a I can't be triggered day.
All right.
So listen, the Fed Clarita literally said today, low unemployment won't necessarily, lift interest rates, and that literally got a okay. That didn't even spark a, oh my God, the Fed is the worst entity in the history of mankind, and they're going to kill the dollar and lose our reserve status and all of that. They're the biggest joke in the world. They've lost all credibility, or they're killing the middle class, and all. It didn't trigger anything of that. I would just say I would like to understand what the role of the Fed is, since they're not going to do anything. I am curious in that capacity, but we can save that conversation to a later date. No, I'm seriously, I'm trying to understand the VIX here, because I do think the VIX is here's one of the reasons I hate the VIX. It's lazy analysis for traders, for people on CNBC, for whatever. I've just seen it as the most lazy analysis in the history of mankind over the last 7 years. But with the market doing what it did last week, okay, I do have a question regarding about if the VIX is trying to tell us something. And it's not just last week, okay? It's not just last week, but it's also the historical norms. When you saw previous type of price movements that we have seen in the last, say, 2-3 months, okay? When you've seen those peak euphoria type price movements, the VIX would come down into that 10 to 12 area, and the VIX never did that. The VIX really kind of pegged to that 20 period. That's number one. So that's a fundamental change in the VIX from a historical perspective. But also the last 3 days in the VIX is really concerning to me. Okay. And the reason is the market was overextended bullish, which typically leads the VIX to come down. The VIX isn't buying that last week's price movement at all. And I'm truly trying to understand if the VIX is trying to tell us something here.
Yeah, I mean, how many times have I brought up the VIX in 2020? Maybe once. This is like the second time. I mean, I think the VIX is telling us that there is such rampant call buying speculation going on right now. Like rampant, like with a fervor, just greed and excess going on in the market, that it is just creating real genuine option volatility by the amount of like the skew in the call put ratio, by the amount of call buying, by the amount of ferocious retail appetite right now. And hey, man, it is noteworthy. Because as Matt just said,
analogy.
The what?
Oh, go ahead. I have a gambling analogy for you.
All right. As Matt just said, if this was the slow, steady uptrend that was stable, that thing would be slowly bleeding off. If this was hey, there's just all calm, nothing to see here, the VIX would slowly bleed off, because that's what it always does in this situation. Like this VIX volatility, when you study the VIX historically, this kind of rising VIX situation happened in .com, man. Happened in .com. When there's that kind of retail ferociousness, and it's concerning. Listen, it's added to another item on a really extremely high list. things that you should be cautious about and why you should still trade bullish, but don't be over leveraged, and realize that a shakeout day is coming in the next, from tomorrow to 5 weeks. I really do believe that.
Matty, you had a gambling analogy?
Well, I kind of see the VIX similar to, like, you have your Vegas casinos, right? They come out there and they put out lines on games, right? And let's say the opening line on a New England Patriots Miami game is -6. Okay, they're playing at Miami, they're -6, and this is back in the day, obviously. So it's -6, but you have all the money coming in on one side, right? Well, what does the casinos do, Mark, when you have all the money coming on one side?
Well, they adjust the betting line.
They adjust the line, right? And not only do they adjust the line to -6.5, -7, -7.5, -8, right? Not only do that, but they adjust the VIG as well. And so instead of getting, say, on a game you get even money, you're paying -120, then you're paying -130. So you have to bet 130 to make 100. And so they adjust not only the line spread, but they widen the VIG as well. That's how I'm seeing the VIX right now. Is you have the professionals out there saying, okay, guys, if all you want to do is go buy out of the money call options here, we're going to adjust the spread here. Instead of standardized paying 5% of premium, you're now going to have to pay a standard of 7% premium. You're now going to pay a standard of 8% premium. You're now going to have, even in the same historical technical conditions, even in the same historical volatile conditions, the market maker is basically saying, being Vegas here, the market maker is simply saying, okay, the price to play has to increase as well. And so I think you're starting to see new standards start to set up, just in terms of similar historical volatility, but now simply because you have this euphoria of speculation coming into the options market with a lot of these new generations. I think you're now starting to see norms getting established in volatility, where you simply the price to the ticket to play here is simply got to be a little bit more than historically it was.
First of all, Steven made me laugh here. He says, I think we broke our record for the longest the VIX chart is up on the halftime show today.
There was
Possible,
a time. No, there was a time I was doing a protest. Scenario where I left the VIX on for like 30 straight minutes, when I was like, somebody teach me about the VIX. Somebody teach me about what is the VIX trying to tell, and I wouldn't get it off. So I don't think it's a record, because there was a protest, me kind of filibustering one time. But I like, literally, I'm seeing the VIX, and I just think this is the market maker's way of telling people, guys, what you're doing in terms of just going out there and blindly buying out of the money call options in a momentum perspective, you're going to have to put a hell of a lot more money up to play.
Yeah, I think a lot of those things are definitely takeaways. There's no question about it. And I mean, anybody who's traded for a long period of time, you understand 24.5% on the VIX is not low. Even from a historical perspective, you are paying premium for options right now. And Mark, I know the credits are lower than they were for you like 2-3 months ago, but you're probably still getting good credits.
Dude, the credits are just fine. I mean, that actually question in the weekend prep class we do for pro members, that question actually came up. It's like, hey, with lowering a lowering VIX, what are some, is this affecting cash flow strategies? I'm like, listen, we are still at a really, look at that. We are basically at the high peak of any point in the last 5-6 years.
You're getting the same premiums that you would be getting in a 10% to 20% correction in the market right now.
Yeah, I know, the premiums are amazing.
You're getting the same volatility in the options market, with the market at an all-time high, overextended, as you did historically when the market plummeted 10 to 20% in corrections. And that's just something historically we've never seen. And so, yes, do I still believe the VIX is fundamentally flawed and fundamentally broken, and a fairly useless indicator, and a widely overused indicator, and a misrepresented indicator, and a lazy indicator for people to that have content out there to get, yes, I think all of that 100%. But I do think you are seeing some historical norms that are shifting to where volatility in the future is not going to be treated the same way as volatility of the past.
I've
See,
got
I wasn't
another
trying to
thought
set
on
up
this.
that. I was trying to have a real, genuine conversation.
Well,
So
let's
that-
have one. Let's keep having one then. I do want to talk about this. Give me the trade tab and the SPX, Matt, and give me the option chain. I got one question for both of you though, kind of not necessarily a pushback, because I think the takeaways on the VIX are still the same, regardless of the answer to this question. As we get closer to the election, the VIX curve, and we looked at it last week. Obviously, we're going to have higher volatility as you get into October and November. And so the way the VIX is calculated, 14 days to 42-day options, as we get closer to the election, it naturally will have higher volatility numbers that are going to start to be calculated.
How do we know
on
that?
Yeah,
How do we know that? That is not historically defined at all. So if you want to push back, I got data, bro.
Well, we know how it's calculated. It calculates 14 to 42-day options.
That's
And-
fine. That's fine. But historically, coming into those elections, you don't see that.
Well, I'm not saying it will stay
Not
that
even-
way.
Okay, not even in the last time you had the most important historical election in the history of mankind, 2016. You didn't see that. Not even in the last time before that, you had the most important election in the history of mankind, 2012. You didn't see that. Not even in the last election before that was the most important in the history of mankind. Did you see that in 08? Not even in the subprime market crash did you see that.
Mhm.
So you actually saw volatility either stagnate or decline coming into those moments. I get it that we have 2 months before the most important election in the history of mankind, and this is going to fundamentally shape America for the next 200 years, which those takes, I don't even listen to those takes because they're historically not accurate in
Mhm.
any capacity and typically are just used for political propaganda machines. So I don't care about that. What I care about is the historical accuracy of the data. And the next 2 months, yeah, I think it's going to be volatile from a political perspective. But historically, I just don't believe the data is there to justify rising volatility and thus typically falling prices the 2 months before the election.
Yeah,
My data suggests it's fairly neutral if you take out the subprime market crash.
Yeah, listen, normally in a normal election season, you don't got a lot going on, right? You know, no news. I mean, 2020, if you started trading in 2020, you're like, oh my gosh, there's all these things all the time. Normally markets are kind of boring. That's why you get the low volatility. You know, and so normally in an election, there's this big buildup because there's nothing else to talk about. Hey, man, like, election is the last thing on my mind right now. It really is. I'm worried about a technical sell-off because of all the rampant speculation that triggers a shakeout day. I'm worried about the fiscal cliff that we're on because that August data, there wasn't nearly as much money in consumers' pockets. And that is going to start showing up in the economic reports that are released in the next few weeks. And so we've seen over the last 6 weeks in the market that when a Fed speaker or when a company has the audacity to give forward guidance, when there is a reality check and the market can't ignore the numbers, this is where we saw Cisco sell off big time. This is where we've seen after Fed speeches where they say, hey, you know, it's not, that's where we've seen some bigger of the sell-offs over the last 8 weeks. And so when that economic data starts to come in September, because there wasn't nearly the money in individuals' pockets in the month of August as there were previous months, that might be an economic reality check that the market can't ignore. Election is way down on my list.
And Tim, let me be clear on one point really quickly. If you take into account the 2008 subprime market crash data pre-election, there's an edge to the downside on volatility, which means volatility goes up. Okay. So if you do include the volatility measures of September and October of 2008, then yes, there is an edge to volatility rising. There is. I discount that just given the fact that we were going through September and October of 2008 and the subprime
that was when we were crashing.
crisis. And so I do.
Well, in statistics, that would be an outlier. You'd probably throw it out.
Right.
I mean, if you really,
do throw that out.
Yeah.
Now, if you include it, there's an edge to volatility rising. I'll be the first to admit it. If you throw it out, it's pretty consistent with other September, October seasonality things. And so if you include it, it's a slight edge to volatility increasing. If you disclude it and you just throw it out as an outlier, which I am doing, and that's subjective, it is, but I am throwing it out, then volatility is really mixed in that capacity. I just don't, guys, I know there's a lot happening, and I know if you like when we're reading the news and we're going through our Twitter or our Facebook, and we see what everybody is saying, and we see all the human interest stories of this clash and that clash, and if you watch CNN or if you watch Fox News and that's how you get your worldview, it seems like we're in Civil War 2.0 out there right now.
Mm-hmm.
But when I go out there, and maybe I'm just living in a pocket of Salt Lake City, Utah, but I don't feel that. I just don't feel it. I don't think we should trust the media or social media to have an understanding of how Americans truly do, how we feel about one another. Or maybe that's just me and I just love everybody. I don't know. Okay. I just don't think this is the most important moment in our history, and I won't think in 2024 it's going to be the most important moment in our history. I think those things have to be historically defined.
Mm-hmm. The divergence is definitely, a head scratcher in that regard. I think people are trying to ask and answer the question. I mean, I had conversations with several traders over the weekend, and they're like, why is the VIX going up? I think a lot of people are curious. Markets are up at an all-time high. We're in doji markets. There's not much going on. Why is the VIX going up? I think it's a great question and a really good conversation here, guys. I've enjoyed it. But I do want to.
We got a good 20 minutes of content out of the VIX.
20
today.
minutes. 20 minutes on the VIX. I mean,
Tim is
who had
talking about.
Who had the over under on that?
I did. I was the market maker. I'm the one who said it. I was like, I'm going deep diving. No, I truly.
All options would have expired worthless if you make bets on 20 minutes on the VIX.
Expiration happened 4 other times already. No, but I truly do. I wanted to have a little bit of a conversation because the last week's price movement in the VIX was a little bit funky given what we have seen historically. And so I do think the VIX is trying to tell us something. I just think as of right now, it's trying to tell us, listen,
be cautious.
If you're going to be going out there and trading momentum, you need to play a little bit of a higher price. And typically, historically, that's not very good for buyers of options.
No, but it is very good for
it is a
sellers.
Fantastic thing for sellers of options.
Yeah, credit traders definitely get a bang for it.
I hope this market never ends.
I am certain that in areas of Florida, Pennsylvania, Wisconsin, Michigan, Ohio, in those battleground states, I am certain it's a little bit different than it is here in Utah. Yeah, I'm certain of that. And Utah, even though it is a fairly conservative state, even liberals in Utah would be considered conservative nationally. Like the Democrats of Utah are more blue dog Democrats who are fiscally conservative. Think about it like that. So that would kind of be me. So in terms of fiscally conservative, but some of the social things I want to see. So yeah, I agree that living in Utah, sometimes it's a little bit of a bubble. We in Utah like to keep it that way. So maybe I drive around Utah and I'm shocked that Walmart's not burning down. And then you go to Wisconsin or you go to Cleveland or you go to Portland and you have a different perspective, obviously. So maybe I'm just very thankful I live in Utah.
It's like the old Iceland thing. Call it Iceland so nobody wants to come here, yet it's probably just one of the most gorgeous places on the planet.
Oh, Dina, conservative. If you guys, yeah, Democrats of Utah, they're amazing. They really are. Everybody's fiscally conservative in Utah. It's Utah. We are born and raised to be fiscal conservatives.
Oh, our state budget is something that I think people could model after. There's no question about it. You can criticize a lot of politicians on a lot of different issues.
Utah is a very smart business state.
Not on our budget.
The positive state budget, one of the few.
Yeah, Utah's a very, very positive. Let's stop talking positive about Utah. Then too many people would come.
Well, they're coming anyway, Maddie. I don't know if you've seen.
We like Utah being the way it is.
Yeah, I think they're coming anyway. It doesn't matter what we have to say. The real estate trends have been positive for a long time.
California, if you come to Utah, we have lots of wives and lots of babies, and you're going to have to take on all of our taxable revenue.
Yeah, that's right. That's right. Oh, all right. Let's move through a couple other news areas of the market. I do want to get Cody while he's in here on one thing. Cody, I did see one COVID note here today just on the vaccine. The FDA saying they might skip phase 3 approval if they feel like they can rush something quickly. Is
I
that
sure hope not.
obviously that's an emergency thing? I mean, I didn't really. Is that just because of the severity of COVID, the need for it, all that kind of stuff? Did you see that headline as well?
I haven't seen the headline, but if they are looking to skip a phase trial, that just means that they don't want to put in the time to make that trial, because phase 3 trials are larger portions of a larger sample size over a longer period of time. So if they're skipping that, they're probably doing it for time reasons in order to push it out to the market.
Well, and I
don't
did read
necessarily.
this statement. They said they're going to base it on data, obviously, and all that kind of stuff and science and whatnot. So, I mean,
Well, your first phase of the trial give you somewhat data. The reason there's so many phases of trials is you keep increasing the amount of data that you have on a particular drug. That
Mhm.
way, it becomes more and more statistically relevant as more data is collected. When you have a sample size of 10 when you first start, that's nothing. But as you move forward and you end up with sample sizes of thousands, then it's easier to see whether something's statistically relevant and whether or not you get that golden 95p ratio. And when you can get that, then it looks really good. But if you only have a smaller sample size, then you're not going to have as much statistical relevance for the vaccine. So I think if they are skipping it, it's probably due to just the time constraints behind it. I'm not really a fan of it because I would rather have something well tested. Yeah, that's my thoughts on it.
Well, we've seen a couple of headlines around that recently. Just wanted to get your thoughts on that, Matt. Other things in the news, quite frankly, today we did have one note out of China, just that they might apply this export restriction thing, which basically gives them a veto if the TikTok deal does happen and they don't like it. Microsoft sold on the news, Walmart sold on the news, all that kind of stuff. I mean, this TikTok deal, I've also read, I read it last week that we're within days of getting a deal done. I read this morning that it's probably coming by Tuesday. I don't know what to think about this whole thing, quite frankly. It feels like it's still up in the air. We're not, across the finish line yet here, Matt. How did you read that news?
Oh, I'm in the mode of talking about the Jazz and the Denver game. So, okay, on the TikTok news. No, I was kind of kidding there.
When do the Jazz play?
You're the worst NBA fan of all time. And you don't live in Utah. Everything I said about Utah, guys, Tim doesn't live here any longer. He doesn't even know when the Jazz play. That's the only thing.
Tomorrow, I'm sure, right?
The Jazz
Tomorrow.
are in the playoffs. Like literally, you want to see what ends civil wars. The Jazz end civil wars in Utah because Utah versus BYU is the civil war. We all come together to support the Jazz, but then Tim always tells me, "Hey, what time's the Jazz on again? Hey, when's the Jazz play?" Jazz play tomorrow, bro. Great game last night.
By the way, on a basketball note, while we're on it, did you see that John Thompson passed away?
I did. John Thompson, great coach.
Yeah.
Great coach. Georgetown, just iconic coach. Yeah. We've had too many people pass away. 2020 can kiss my ass and get into the rearview mirror before, like literally just all of us. Nobody wants to get older when you get into our age. Nobody does. I can't wait for 2021. I can't wait till I'm 43 years old. I can't wait for that moment.
Bro, we're almost there. 4 more months.
I know. Unfortunately, I turned 43 right before the election. So I can't wait till I'm 44 years old, 44 years old. No, I mean, Tim, the news, I found the news interesting. But I'm unsure what it means yet. Because what China did seemed like a shot across the bow to the US from the regulations we've been putting onto US companies. And so effectively, it gives China a veto over a TikTok sale to a US conglomerate, basically. Would they exercise that veto is the open question. I don't think so. I think this sale is going to go through. I don't know who it's going to go through to. We might get that news literally today. We might get that news while we're live on the halftime report. And if we do, guys, let us know there. But I don't think it signifies that a deal is not going to be done, or Microsoft would probably be down more than 1.5 points. So, or Walmart, for example. Let me get out of the chat in there. Or Walmart, for example, would be breaking support. So I still think a deal gets done. It's just about who gets that deal and what are the parameters. To me, it seems like they're trying to, okay, if I was looking at this in a bubble without the geopolitical Chinese-US type of analysis, I would say they're trying to drive up the sell price.
Yeah, but it's coming from the state, right? I mean, it's coming from the Chinese.
So
Yeah.
you
I
don't
mean, why
think the
would they?
Chinese state has their little greedy fingers in these types of deals to say,
Do they get?
that,
They get a
wait,
cut?
what? It's only American politicians that have their greedy little fingers in these types of deals? I'm sorry, Kodak. I'm sorry. It's not just American politicians. I guarantee China has a little stake here. So or maybe they just want to. I don't know, but it would seem like a negotiating tactic to drive up the sell price.
Mark, in 2 months' time, let's even give it 3 months after the election, November 31st, the last day of November, whatever it is. Do you believe that one of the U.S. companies will own the U.S. operations of TikTok? You think it's going to happen?
Yes,
You do.
I do.
So what is the blustering of this rhetoric about the export restrictions so they could potentially veto the deal? Do you think that's just more rhetoric? Is it just signaling the U.S. that we will push back if we have to, if we don't get a good price? Like, I'm with Matt. I'm trying to figure out the news on this one because it is a one-day note. Walmart down, Microsoft down, all that kind of stuff. But I'm not sure how to read that
Well,
one.
I mean, I obviously don't have any specific insight or I would share it. I just, listen, I'm always a bet on things work out kind of guy, So if there's a deal to be had, I think one will happen just because it's in everyone's best interest.
Mm-hmm.
So,
Mm-hmm. Oracle seems to be taking a back seat on these negotiations, Matt, from what I've been reading into it. But again, we'll get the news when we
Once
get it. We'll
Walmart
analyze it.
once Walmart and Microsoft kind of teamed up, we're talking two behemoths of companies kind of coming together. Obviously, that's what we're going to talk about because those are brands everybody really knows. I don't know if Oracle's out of the running yet.
Yeah.
I don't know. They obviously don't have the brand recognition that a Walmart or Microsoft has, but I don't know. I mean, if you just take price performance here, you got to say Oracle's in the running. They're only down 1%. The other two are down more than that.
I want to talk Tesla and Apple, so I want you to flash through some of the commodities and just our regular routine as we do here. Crude oil, there's nothing to see in the chart, so I don't need updated
Oh,
analysis here
and by the
today.
way, Team Tackle, we know that Tesla and Apple splits are today, and we know that it's very, very important to talk about these two companies, but we're not going to break our routine just to fit the hot topic of the day. I think having a standard routine in the market is vitally important, regardless of whatever you think is happening that day. And so, why did it take us this long? Because we're going to have conversations about the market before we get into individual components of the market. And we're very consistent in that, the same way we're very consistent in our routines as traders.
I mean, here's the bottom line, Matt. I am anal about my routine. I'm
Anal.
completely
So am I.
anal about it because I've been doing it too long. It keeps my brain in an optimized
Oh,
place
you're
where I can make
you're
a good
Russell
decision.
Crowe in A Beautiful Mind anal. I mean, you put that. I'm not like that, but I do think having a structured standard routine is very
Yeah,
important.
you got to make it yours. There's no doubt about it. But a routine, a daily
Sheldon
routine is
Cooper
very
anal.
important. What kind of
Sheldon
what?
Cooper.
Sheldon Cooper? No, I think that's a different level. I'm not on that level yet.
Hey,
Gold.
Cody, give him time.
The older I
He'll get
get,
there.
yeah, I'll
Give him
get there.
time.
Silver, little tiny test of this little
Oh,
breakout.
you didn't want to get our technical take on crude oil?
No, I'm done with crude oil.
You didn't want us to, talk about how you got to wait
Upgrade.
for the breakout and probably
Upgrade it.
not even hit the breakout, wait for the
Hold on.
retracement. Okay.
I'm
I'm good.
gonna buy crude oil. Hold on, let me look. No, that chart is so boring. I have nothing to say about crude oil. Gold banging into that moving average. Got a little test here at 1980, just in the short term, but really the test is that 2015 marker on that pivot. Nothing there, in my opinion, from terms of analysis. You can give us anything you want, though. I
mean, just my thing, and I went over this in the commodity report this weekend. I think that the numerous test of that support level that we can now call a support level that has, I mean, listen, when bears have a chance to bang something through and fell, and 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 they keep failing, only one way price to go. So I like that support level that formed.
And Dina, on your question, real quick, yes, please explain the weird amounts in my account, why it's showing huge losses, but not. I'd have to know if it's paper or live, and sometimes those just don't update right away. So your cost
the
basis
market
would be
showed
different.
Tesla down 70, Apple down 75% today. It's split day, guys. Give
Yeah.
the market time to adjust. We all know people didn't lose 75% of their money on Apple today.
I think that would be quite a scene though. Somebody didn't know the news of the split, haven't logged into their account. They log in and they're like, "Oh my God, what just happened?" You know, I'm sure there were some people with some panic moments out there who don't understand how to read
Oh,
those
I'm
signals.
sure there's some new generation Tesla bulls that are like, "Oh my goodness." No, that's not.
Don't worry, Tesla people. That's going to happen to you in real life in the coming weeks. So don't worry.
I'm calling you shot there a couple weeks. I did.
Listen, Tesla's going to have a blow off top and then it's going to crash 40%. So there, I am calling it.
He's calling
Is
a
that
shot.
after it goes up 500% and then contracts 40%?
Yeah.
You know,
So is it a pullback?
Okay.
No, okay. Let me be more specific. I think it's happening a lot sooner than later.
Oh,
Interesting.
I smell a new bet with Tim.
We'll get a read on it. We'll take a look at it in a second. Hold on that for a second, Matt. Quick look at silver and copper on the metals front. That copper breakout is legitimate. Mark, I know you've got a take on that. Silver, Matt, is kind of pushing that little pivot point.
Yeah, go back to the copper chart real quick. I love the copper thing. I think you got clear selling to 3.3 in copper. I love that technical setup in an environment where everything's blowing the top off. Copper took a month off. I think it's blowing off. I think it's nice 10% upside move on copper over the next few weeks.
Mm-hmm. Matt, is this the trigger you were looking for on silver?
What do you think?
I think so. I know
Yeah.
so. So yeah.
I don't think you got a very similar technical situation on gold, right? And you got to love support bouncing on gold. I love the weekly chart on gold. I think you could add to positions on gold at any point based on that weekly chart. If you're looking to pinpoint your accuracy, you know, we talked about this quite a bit in the halftime report last week, but we also talked about it in the scatter report meeting on Friday. You got to wait for that pivot right there at about 2011, 2012. You got to wait for that pivot to get broken. Okay, if you're looking to pinpoint your accuracy. Now, coming to the discussion on silver, that's what you wanted to see. Okay, so we've talked about the key technical differences on silver over the last week and a half, where you still had the increasing in support and horizontal resistance. All of us like the price action on silver a little bit more than gold, and you were waiting for that breakout of 28. And so you got your breakout at 28. The target is easily at 30. Now the question is, if you're not in already, where do you kind of look to get in? I think you can momentum trade this above the high of today. And so when you're breaking this down, and again, this, if you close above 28, you are calling that confirmation. You have to call that confirmation. And so if you're aggressive on your entry above 28, you're already into that. If you're looking at silver right now and you're saying, okay, I like what I'm seeing here, but I'm not in it, do I still have, the ultimate question is, do I still have the reward to risk necessary? Because you can't target above 30. You just can't. Not in the short term. $30 is a significant whole number. Do I believe it ultimately gets broken? Yes, I do. I believe it ultimately gets broken. I've been very clear on that. But you have to target 30. Just because I believe it's going to be broken doesn't mean it's going to be broken. So you got to target 30. So you know where your return is going to be based on return versus risk ratios. So the ultimate question, if you're not in it right now, is, do you still have the reward? Because you still have the probability. You have the edge, right? And as a trader, you're always looking for that edge. And so you have your probability, you have your edge, whether it's 51% or 55% or 60%, does not matter to me. You have your edge. And so does the return at this point, after up 2.5%, do you still have the potential return to justify the risk? And so when I'm looking at this on the silver chart, let's say at this point you just standardize that trigger right above the high of the day, which does it's right there at about 28.65. So let's say you put a trigger above 28.65 and you're targeting 30. Let's say you get in at 28, you know, I'm just spitballing here, but 28.75. Well, you got about $1.25 of potential risk there. To justify that risk, you got to talk about where you're going to place a stop loss. Now, on a breakout like this, one of my favorite aggressive type stop losses, because I do think you would have to be aggressive on the stop loss here, or you couldn't justify the return versus risk ratio. The best stop loss would be a stop loss under 26. That's where you got this trend line. That's where the historical support level is, right there at 26. but you can't put a stop loss under 26, trigger at 28.75, target 30, and call that a successful trade. You have an inverted reward to risk ratio. Even with a probable scenario, you can't make that trade. So you can't go to the conservative stop loss simply because you don't have the profit potential to justify that type of risk. And so you got to be a little bit more aggressive on your stop loss placement when you're looking at something that has already triggered and ran 2.5% on the day. And so for me, one of my favorite aggressive stop losses on a breakout is to look at the breakout channel, and you have that breakout channel right there at about 28. So when you're looking at that breakout channel at 28 and you're saying, okay, as long as it stays above 28, the reason I like it is because it's breaking 28. So as long as it stays above 28, we're good here. We're good here. And so I'm going to look at this, and I'm going to drop this down into a 15 or a 30-minute chart. My favorite is a 30-minute chart. And I look at that support level intraday right there at 28. You have your old resistance, new support right there at 28. And so I would put a stop loss right underneath 28 there as an aggressive stop loss. And that's if you weren't triggered into it aggressively in the first place. That would be more of a conservative entry versus an aggressive stop loss. And so if you put a stop loss right there underneath 28 and pick your poison there, whatever your personal rule is, you're going to take about $1 of risk for that first target of $1.25 potential return. And as long as you have at least a positive 1-to-1 on your first target, remember, you always have two targets in the step system. So as long as you have a positive 1-to-1 reward to risk ratio at first target, and you have a probable scenario, you still have a good trade there. Whether or not it works out or not, the market will tell in history. But you have a good trade, right? Now at target 2, which target 2 would most likely be in that 32 range, 32 to 32.5 range, but target 2 has to supersede the 2-to-1 reward to risk ratio, which obviously at that point you would have it there as well. So triggering aggressive versus triggering conservatively with using an aggressive stop loss on the breakout channel, that gives you a 1.25-to-1 reward to risk ratio. And then you have up to the top range, you have about a 3.25-to-1 reward to risk ratio, which are really good on a swing trade there as well. So a little bit more in depth in terms of aggressive versus aggressive stop losses. But as long as you use a momentum trigger, i.e. above the high of the day on a breakout with an aggressive stop loss, I still think you can map out a positive reward to risk ratio here.
Yeah. Yeah, I agree with that as well. And frankly, Matt, the way that I personally am approaching silver is I'm managing it through my stop loss. I don't really want to have T1, T2 to actually take me out. I know you got to do that analysis to calculate your reward to risk and those kind of things, but it's not necessarily that I'm going to take profit at T1 on silver. You know,
But I also think you're doing more of a position style
It
than
is.
you are a standard swing trade
It
too,
is.
though. So,
Mhm.
I mean, when you're talking about a position you have in silver, that's more done through stop loss management under 26.
Mhm.
I mean, if you're position trading silver right now, you can discount everything I just said, because that is more swing trading mechanics than it is position trading mechanics. A position stop loss needs to be at a minimum under 26, at a minimum.
Yep.
And you can make a very, very, very good argument for under 24 on a position, because you don't want to get stopped out in nasty swings on an intraday or a daily basis on a position. So an aggressive stop loss on a position trade would be under 26. A conservative stop loss on a position would be under 24. A stop loss on an investment on silver would start underneath 20, in my opinion. So it's just a matter of how you're approaching, and we're obviously analyzing silver right now, but it really depends on it really doesn't depend on anything you're looking at in terms of position versus swing. Those are different stop loss mechanics in general.
Yep, absolutely. And that's part of understanding trading style, trading rules, and all that kind of stuff. If you're a member of our step system program, you know that the rule development in the system on different patterns is really a big part of developing your trading systems.
And
You
can
know,
I
so
answer Brian's question very quickly?
Mhm.
Brian, wonderful question. And what Brian asked, if we have a standardized trading room. we don't do those standardized trading rooms like you would think other people do, where you just have a bunch of, you know, 1 or 2 traders, you know, just basically day trading in those types of rooms. We don't do that. That's not kind of our belief system. My belief system is education first. And so like when, you know, when you saw a few people, they're like, oh yeah, Team Tackle, this is awesome. Tackle, you've helped me. No, that's on them. They took action based on education. And so I believe personally in education so that you can make choices for yourself. We like to come on and hang out with our team. We like to analyze the markets, and I'm certain people get hot tips from us all the time. And I think our track record speaks for itself, quite frankly. But we believe, our core belief is education, Brian.
Mhm.
And so a lot of what we do in our community is we focus more on the education, the teaching style. We certainly have our reports that we put out there, our pick lists we put out there, because we know what people want in that capacity. But we believe that, you know, you should have the education necessary to do this for the rest of your life, instead of having to go from trading room to trading room to trading room to trading room to trading room. I think people find a home at tackle trading because they get sick and tired of what happens in those trading rooms, because we value education above all things, And Team Tackle knows this: education before application. Put the work in so that you don't have to ask somebody what to do for the rest of your life. So glad you found us, Brian. That's awesome. Love the question. I hope you stay with us.
Yeah, and by the way, I mean the best you know, marketing we could ever do is just say, "Hey, Team Tackle, do you think Brian should join the pro
Oh,
membership?"
we don't
We don't
market. We
usually,
don't market.
we
We're
just
terrible
talk
marketers,
markets.
man. We're terrible marketers.
Yeah. Let's move past all the rest of the markets, Matt. The dollar's down a hair. Bitcoin is up a hair, but quite frankly, we'll talk crypto on the podcast today, and we'll talk the dollar and some of the Fed stuff on the podcast
Tim,
today
I'm
as well.
excited for the crypto conversation, and I'm genuinely excited. I know you've been like tickling the beast a little bit, you know, with me saying, "Oh, you're getting interested. You're getting interested." But I am getting interested here. And maybe it's like all the craziness of the Fed and the craziness of the economy, and you know, it's in my belief on the dollar historically and in the future. But I am getting interested here, and I am excited to talk to Jake today on the pod, because I got some questions that I need answered before I start really getting to the point where I'm like, okay, I want to invest. Because it's like I told you earlier today when we were talking about it in pre-production. I'm like, no, Tim, I'm genuinely interested in this conversation because I feel like some of the reasons why I was an early adopter in Bitcoin were kind of died along the way.
Mhm.
And maybe it's just my fundamental lack of understanding of the technology, right? So I have some questions that I hope Jay can answer for me, but I am getting interested. There's no doubt.
I can't wait for it. I know I know you, bro. You're turning. You're turning. Yeah. There's a little head and shoulders on the daily chart. You want to get all worried about that? I mean, there's a little.
No, I didn't believe in the breakout. So no, the breakout for me is 14,000. That's the breakout for me.
Mhm.
Can it be day traded or aggressively swing traded on breakout of 12 or breakout of 13? Absolutely. Can you pick it up at the bottom in a, you know, buy the dip mentality? Absolutely. But for me, the best trigger is above 14,000, because I truly do see clear selling from 14 to 20.
Mhm.
But I'm the guy that if I start trading something, it's because I believe in it, not just because I want to make money in it. And so my belief has been shaken in the crypto markets over the last few years, and I'm starting to get reinterested in it.
Mhm.
And yes, and so yeah, I'm excited to have that conversation.
Oh
I'm
yeah, team crypto and stuff.
Stop it.
Hey, listen, no, listen. I've been on the bandwagon for a good
I know you
5
want.
weeks.
I know you want to bring up whatever it is that
No,
No,
band.
but what I want to bring up is once again support. Support has been amazing in this marketplace. We talked about gold a few minutes ago. Crypto had that little support level that was tested in that 11.5, just south of that level several times. And once again, if bears can't break through, it usually leads to upward price movement in the short term. So
Mhm.
support's amazing. That's why learning technical analysis, whether you do it at tackle trading or anywhere else, is something that you need to prioritize at the start of your education. Technical analysis is amazing.
Mhm.
So I don't know if anyone played contrarian here because I had to step away, but I'm seeing the possible formation of a head and shoulders myself. I
Yeah.
see.
Listen, technical analysis only works when it's in your own bias. If you want to bring up your bad technical analysis,
because I could
no,
see a
it's
left
true.
shoulder
Tell them what you're
ahead
seeing,
and a
Cody,
right
because
shoulder.
that's true. Tell them what you're seeing.
Yeah,
I don't
I'm
think-
seeing a left shoulder, a head, and a right shoulder, and then there's the neckline, which is the support that Mark was just
All
talking
right,
about. But it's only a head and shoulders if it breaks that neckline.
I will
First of all,
stop on this
technical
right now.
analysis is the opposite of what both of you just said. It
Correct.
removes bias. It
That's
doesn't
right.
add to bias.
I didn't say it adds bias. That was
no,
Mark.
Mark did. It removes bias.
I'm
That's
here-
what it does. Let's be very clear on that. Okay.
Sure.
Your belief in the fundamentals of a company have bias in that. That is bias. Technical analysis is price action that removes the bias from the equation. This is a head and shoulders formation from a technical perspective. Now, head and shoulder formations are not guaranteed to reverse, though. Treat them more as neutrality, where you're a little bit more hesitant until you see that ultimate breakout. But to answer, Nicholas's question, since I'm getting more interested in it, would I trade the futures, or would I be more of the investor in Coinbase? Nicholas, for me, it would be the investor route. That's where my interest is right now. I have no interest in actively trading crypto. No interest, zero. And I'm not throwing shade here. Everybody's got their thing. I would far more likely take the trade on AMD, or the breakout on Zoom, or the breakout on Apple. That's my zone. That's where I live, right? Stock and options and commodities in the futures market, or day trading market indexes in the futures market. I'm not interested in actively trading Bitcoin or any other altcoin from a day swing, or even maybe position perspective, because there's so many different tradable instruments, right? And I just feel like the consistency of the stock market right now, and in general, is much easier for me than, say, the crypto market, which I don't fundamentally understand to the same degree that I understand, say, the stock market, the economic market cycle, geopolitical situations, and so on and so forth. So my interest and my skill set fits more broadly based in the stock market, because that's where not only my interest, but that's where I've lived, right? And so I don't have interest to day trade or swing trade over in the crypto market, simply because there's too many better alternatives in the stock market for me, right? And again, if somebody came and said, no, I really enjoy crypto, I'd be like, hey, that's fantastic. I'd high five them. There's nothing wrong with that. But for me, I have no interest in trading crypto.
Mhm.
My interest is in finding investment vehicles that are priced to fly for the future. And one of the reasons I love gold so much is it fits my personal belief system over inflation, over the historical economic conversations we've had. And I just understand it fundamentally, because maybe it does fit I did say there's bias in fundamentals, guys. There's bias in long term. And maybe it just fits my internal belief system a little bit more than other tradable instruments. I'm trying to find the answer ultimately to a question on Bitcoin, because I do believe in the technology. I do believe in blockchain technology. The same way I believe the internet changed the world, I believe blockchain technology will fundamentally change the world. I believe that. Is Bitcoin that instrument that also fundamentally changes the way we as consumers and governments around the world approach the markets? I'm trying to understand that question from a fundamental long-term investment perspective. If I can, because you hear a lot of arguments on Bitcoin being the gold of crypto. I believe that digital asset classes in the future should be widely invested in. Our world is quickly going digital. We should position ourselves the same capacity. Does Bitcoin fit that investment thesis? I want to hear from Jake. Instead of just a 5-minute conversation. I want to hear the deep dive of that question. And if I can answer those questions, yeah, I would look to invest in Bitcoin. especially as we approach that 14,000 breakout, because I think that 14,000 breakout could be quite significant. But I'm not just going to trade something just because it exists. I personally need to have some belief in the company, and it kind of fits my worldview. Like I don't even trade Goldman Sachs, guys, like ever. I can't remember the last time I traded Goldman Sachs because I just feel dirty. I just feel dirty. I feel like a dirty human being. I feel like a greedy, dirty human being because I'm making money off a company that I find is one of the most unethical, irresponsible companies in world history. Same thing with Deutsche Bank and quite frankly, most banks around the world. So I don't trade or invest in things that I just don't fundamentally have a viewpoint. I'll short them, but I can't because I'm emotional about banks. I can't. I'm emotional about Goldman Sachs, and I recognize that emotion. But for me to invest in it, for me to start tracking it on a daily basis, call me crazy. I got to care about it. I do. I have to care about it, or I'll just get bored.
Mm-hmm. And that's that fundamental conviction, especially when you're talking about an investment thesis. And I am also looking forward to the conversation with Jake. There's several takeaways right here that I think everybody should listen to. Number one is that we're going to be talking about Bitcoin on the podcast. Number two, the question you answered about futures or something else. I guess there's all kinds of approaches, but here's the thing. And if you have any interest in any of the cryptos outside of Bitcoin, like Ethereum, which is still a very, very popular one, Matt, it's $48 billion market cap on Ethereum. You can't.
Yeah, you can't do anything on the altcoin perspective, but you have other brokers out there outside of just parking money in Coinbase that you can actively trade.
Well, it doesn't have to be Coinbase. Right? No, it doesn't have to be Coinbase.
I mean, there are other better active brokers out there in the crypto market than Coinbase. Yeah. I just think Coinbase is really easy to park money in and invest in crypto.
For U.S. residents as well, I think it is. It's a good play. They're going to be IPOing soon. They've got security measures.
Oh no,
we'll talk to Jake about it.
No. I've never had a bad experience in terms of investing or trading in the financial sector.
Ahmed, let me interpret Matt.
Ahmed, I called the crash in 08. No, I never had a bad experience there.
Any random chance to drag down Goldman Sachs and Deutsche Bank, Matt will take it. So
I'm a very principled individual. I have my principles, and right or wrong, they are my principles. They are my belief system. They fit my worldview. And so, no, it's not because I had a bad experience. Those are part of my principles. I don't agree with what the banks have done over the last 15 years. I don't agree with what the banks have done since the elimination of Glass-Steagall in 1997 and 1998. So my view of the banks, Ahmad, is not based on my trading experience. It's based on my historical understanding of market cycles and specifically regulations or the deregulations thereof. It's more from an economic fundamental perspective than it is an active trading perspective.
Give me Tesla's chart immediately. How is it we have not actually looked at the price response yet? Because I understand, but listen, I do have a little stat.
We have an agenda coming into this, but usually it gets blown out of the equation because we like to answer questions out of our community.
There is the 4-to-1, or is it 5-to-1 split here on Tesla right here. And guys, I actually had to do some math on this recently. Matt, we were talking about the split obviously for most of the month since the announcement, and that pricing structure from 275 all the way to 487, it literally has gained, and I want to get this number correct, $175 billion in market cap since the announcement of the split.
Yeah, it's crazy train.
It is an incredible momentum play. Guys, I didn't know what to expect here on a Monday. I'm very interested to see what's going to happen. We've obviously gone crazy here on momentum and trend and breakout. It's one of those high flying stocks. Mark, you're calling for a big correction here over the next, what was the time frame you said? Several weeks
listen, when things go parabolic, they don't build support. You get a snapback day eventually, and it's usually very, very harsh, and that can lead to, it's just a technical situation. We saw it in gold, right? Snapback day wasn't the end of gold, right? Because
you never put gold into a Tesla analogy. I said this was a no trigger day. I just got triggered.
But I don't have fundamental conviction on Bitcoin at all. I don't understand it well enough to have really a case one way or another. I never really looked into it. One of the reasons I'm bullish on Bitcoin is because of this Tesla pattern. There is no resistance these days on blow off tops. You are seeing, once again, run-ups into earnings today on Zoom. You are seeing run-ups into earnings today on CrowdStrike, a pattern we've seen constantly over the last 4 or 5 months, where lead up into earnings, companies, the computers, they blow out.
I get your caution. I really do get your caution, Mark. But anybody who's bet against Tesla over the last,
you should not you should not put your name on the next few weeks being Tesla coming down, because you're.
I'm just listen, man.
Proven wrong. Say I don't get it. Say I'm staying away from it. Saying this is crazy train. That's all fine. But that army that Elon Musk has is the most fundamental army in the world today.
Oh, I do get Tesla.
Yeah.
It is rampant speculation. It is rampant call buying. It is rampant retail speculation. It's not based on anything fundamentals or whatever. It is. So I get the price move on why it occurs.
You get Dina's argument then against you. As the Borg say, resistance is futile.
So that's nice. That's nice. Day of reckoning's coming.
When though?
So, well, I don't have my Nostradamus
No,
crystal
well,
ball.
that's my point. I've been hearing this on Tesla since Tesla was $40 a share, guys, in an $8 billion market cap. What's the market cap today? 300 billion?
if you get a 20% correction from here, Mark, we're only going to be at like $400 a share. So,
I mean, yes, at what point? Like, I agree. At some point, Tesla will have a magnificent crash. I agree. But that will be a massive buying opportunity.
I only listen to Coach Hero on Tesla.
That's all I listen to.
So,
I'm with Hero. Whatever Hero says, I am with him on this one. I said a couple months ago, I'm back on Elon's bandwagon. So, yeah, is it crazy? Yeah, it's absolutely fundamentally crazy. You can't look at this and be like, this is fundamentally supported. Even Hero, who is the Tesla bull, Hero's not the cheerleader. Hero's the general in front of the army leading. Okay. And even Hero's like, no, fundamentals don't matter anymore. Hey, listen, I'm with him. This is crazy train. It makes no fundamental, no economic, no behavioral sense in any capacity. But you know what? I guarantee people woke up today and they're like, oh, Tesla was $2,000 just a couple of days ago. Now, oh yeah, that's fine. I mean, here, and I don't know if this is real or not. Okay. But I had to put this out on Twitter because it made me laugh today. And this is all, this is it. And again, I do not know
a fair amount of
if it's real. Okay, I'm starting the conversation that I do not know if this is real. Okay, because it doesn't seem real to me.
loans. And I just, I called my brothers in finance. I'm like, put all of this in Billabong.
Yeah, my dad's been a little bit skeptical of my kind of stock instincts as well.
What's your portfolio right now?
Well, so he wants me to do like more blue chip stocks and then, take some risks with some of my portfolio on some, more fast rising companies that aren't as well established. But to me, it's like, Dad, that's all just verbiage. You know what I mean? Talk to me real. Talk to me like a man to man. You know what I mean?
Yeah.
So when I come at him, I just go, Dad, pokey.
Yeah.
Do you love it? Does everyone love it?
Yeah.
Who's got the best pokey on the mainland? Bear Flag. Let's invest in them.
Yeah.
They're not a publicly traded company, which is crazy.
Dude.
Because what's their market cap? $3 billion. They got 3 stores.
Yeah.
Yeah. They're probably doing $1 billion each.
Dude, their IPO is going to be off the charts.
It's going to be huge.
Yeah.
Yeah. And then
That's initial public offering.
But we're sitting on that. We're waiting.
Yeah.
So then we go, okay, Pokey Shack. That's a publicly traded company.
Yeah.
That's when we can invest.
My grandma gave.
that's so funny.
I love it.
Those
You don't
millennial,
think those dudes saw Tesla $500, $450 stand like, oh man, it's cheap. Must be a really good buy opportunity. Hey, listen, don't fight that.
bro. I mean, listen. I mean, my dad wants me to just invest in like blue chips, but I'm just thinking like taco
Talk
trucks.
to me like a man, Tim.
Taco trucks. I mean, they make delicious tacos. Everybody
That's
needs a
just
taco.
garbage, bro.
Yeah. I mean, they got to be doing like $1 billion revenue. I see guys down there all the time. So I think
Listen,
we're going to
and
taco
again,
trucks.
I want to be clear. I don't even think that's right. I think that's a parody. I
I think those dudes make parodies. Yeah.
I think it's a parody.
Yeah.
I
And
just
they're
think
good
it's
at
fun.
it.
I think it's funny, but
I
I
think
do
they're-
think it's a parody.
Yeah.
I want to be clear on that though. I love the fact new generations are getting into the market. I love they're making bad mistakes that they're going to learn from at a young age, so they don't have to be the 40, 50, 60-year-old individual who starts learning the stock market. Okay. I love the fact that new generations are getting interested in the financial markets. Absolutely 100%. They're going to make mistakes the same way we made mistakes. And it's easy for people like us to throw shade and make fun of people that are just starting. What would you say about me when I first started? Looking back 15 years later, we would make fun of the dumb things
Of
we
course,
did.
we were stupid.
We did
Every new
we
trader is
all make
stupid.
those mistakes. So I love it. I just think it's funny more than anything else. But don't fight Tesla.
But no, back on the kids though, I do think it is indicative of 2020 that kids are now making parody videos of investing and trading. Kids were not interested in this before. It is this new generation coming in, and if it can spark more interest, great. All power to every one of them involved. Matt, even your daughter, we were doing brunch yesterday. She's like, "Hey, my friend's messaging me about TikTok, or not TikTok, but the Robinhood app, and what is this, and what does it mean, and all that." And I'm just like, oh, well, these conversations are going to happen more and more and more as young people get interested in the market.
From the one daughter who won't listen to me on that stuff at all.
But some dude messaged her, hey, check out Robinhood. Now it grabs her attention.
Oh,
it's
I
funny,
literally,
funny how,
she said that yesterday. I just was like, I just shook my head. I'm like,
yeah.
You'll learn. You'll learn.
Mark, I'm not saying you're wrong. I would not, be surprised if Tesla has some kind of correction. Are you going on the record that you don't believe Tesla should deserve a $480 billion market cap here in September of 2020?
Dude, it's a car company.
I think it might be bigger than all the other car companies.
It's a technology company, but
no, it's not. It is a car company.
They are a technology company. See, this is where the disconnect with believers in Tesla. Anybody that actually has a fundamental belief in Tesla does not see it as a car company. Not one individual who has a fundamental conviction of Tesla.
It's the beautiful thing about betting in general. Like, I cannot like Ohio State Michigan game. I can be like, I don't want anything to do with that game. It's stupid, and I can go make money in another game. Same thing with stocks. No, we can all make money and not be on the same page on a certain company.
Well, and I love what Tammy said. Tammy actually said that here in the chat, Mark. As long as I'm making money on Tesla, who cares if it's crazy? And I get that as a trader. I mean, I think traders are
as
like
a trader.
that for sure.
If you're an investor, you need
You
to have
to care.
conviction.
Different analysis.
Trading, I mean, yeah, that's vastly different beast.
I'm fascinated on the math on these market caps, guys. I don't know why it's grabbing my attention so much, but Toyota Motor, Honda Motor, GM, and Ford combined do not equal one Tesla.
Are any one of those companies going to Mars?
Nope.
Then I'm on Tesla.
I don't believe they are. All right, let's talk Apple.
By the way, Mark, I'm with you. I don't have the fundamental conviction in Tesla. I don't.
Let's talk.
I think it'd be traded absolutely, because it's a fun trading environment, but you got to be aggressive on stop loss management.
I agree. Whenever I hear the ding. All right, Apple next here, Maddie. The 4-to-1 split happened on this stock as well. This one, I think everybody does have fundamental conviction in, and here you are breaking out of a high base, Matt. What's your read here?
That's a breakout that should be traded.
I think it's clean.
It is. It's very clean. You had 4 days of consolidation. You're breaking up. It's a no sell day. Splits don't change the fundamental valuation, but it's not the market today. I mean, this is a breakout after consolidation, and kind of like AMD, eventually these breakouts are going to fail. They are, but until they fail, you got to trade the pattern, and this is a breakout that should be traded.
I mean, you really in this market, and I don't care. Like, I turn more bearish every day, but if you don't have a breakout trade somewhere going on, you're really doing yourself a disservice. That doesn't mean that you have to go crazy, right? But if you're like, I can't do anything. No, I mean, trade. I mean, you got to have a breakout trade somewhere going on, because they think those things have been killing it for months and months and months now.
So I'm with you on that, Mark, and I'm picking up on that from you here today as well, that the longer that this market keeps moving forward, you tend to get more concerned right now, even from last week when we did the podcast where we were talking about your bearish newsletter, but yet you still are trading bullish, correct? I mean, you have bullish positions. It's the only way you approach it. Is that just a message of caution? Is that just your instinct that game theory, we've been above the 9 far too long? I mean, where's that coming from?
as far as the extra caution in my voice, fundamentals keep getting worse. There's less money out there. It's like what has saved this market and the economy in general are those trillions and trillions of dollars that the government put in. We saw it in the personal income and outlay statement early. On where I mean that initial personal income after the stimulus thing blew me away. I was like, holy cow, I had no idea the magnitude of what that would do for the average individual. We saw that reflected in companies like Target and Home Depot and Lowe's, and Apple, where people spend money, right? Don't bet against the consumer if they got money in their pocket. That's dried up. And so until another stimulus deal comes in, the fundamental and the economic condition is deteriorating. The Fed, very, very spot on that. They don't try to hide that. And that stimulus money just is not there where it was. And so the fundamental situation of the economy is getting worse, and stock prices keep getting higher. There has to be not even counting any big long-term bearish argument, there just has to be a reconciliation of those two facts coming up. And so it might start happening in those economic reports coming here in September.
I mean, I understand it. I do get it, but you still got to trade what you see, right? I mean, that's
but
gotta
like
be the message.
you do not try to be like, you can like analyze all that. You got like, before we had that little tirade of a conversation, you got to have at least a breakout. And the more aggressive you want to be, the more aggressive and the number of breakouts and the number of shares and the number of things, because it might not happen for another 6 weeks, that shakeout, might not happen for another
It
6
might not
months.
happen
Might not
for the
happen.
next 6 years, and it might not happen. We don't
And
know.
so you
We
have
are
to,
going. Oh, go ahead, Mark.
no, I can't remember who it was, Peter Lynch. Somebody said something really, really smart, and I'll find the quote and I'll share it with you tomorrow. More money has been lost waiting for a pullback than the pullback itself. And I think
I was going to say the exact same thing, Mark. Listen, I'll be the first to admit that what we've seen in the last 3 months specifically doesn't make fundamental or economic sense. Okay, traditionally speaking, all right. And it does feel like we are living through peak euphoria 99 2000. That's what it feels like. But I've also been around the market long enough to hear people be concerned about the 2013 breakout and the 2014 breakout and the 2015 breakout and the 2016 breakout. And I've been around long enough to realize that I remember the days during, August of 2011, where everybody was calling for that next crisis in August of 2011, and the market went down 20%, and everyone was like, "Oh, the end of the world is happening. The end of this world is happening." And then what happened? The Fed came in with quantitative easing 2, found a market support, and the market went up another 20%. I remember, at the end of quantitative easing 2 and the announcement of QE3, and then the curtailing, how that led to slowing momentum in 2015. And all of a sudden in 2015, it's like, oh my goodness, the end of the world, the end of the world. Now the market's going to go down, the market's going to go down. And I was very hesitant back then because we were at that standard 7-8 years in the market cycle. And I kind of bought into those predictions that, oh, the market's going to go down. I mean, one of my predictions coming into 2015 was the market was going to go down less than 1%. And because I thought we were going to see slowing momentum followed by downward movement in price in 2016. And you know what? What'd the Fed do? They came in and they adjusted their monetary policy. So I've been around long enough to realize that, yes, we are living through an environment right now that doesn't make a lot of traditional fundamental and economic sense. But we're also going through an environment where we've never seen the Fed do what they have done either. So I do believe that the market cycle traditionally is broken, and we're living through something new that we don't understand yet exactly the historical ramifications as of right now, right? But until we see the evidence, with our own eyes, you got to trade breakouts. You have to.
You have to.
You have to.
And it's only a question of how much risk tolerance do you have.
Well, I get
Like,
that. That's portfolio design, though. Go ahead, Mark. Sorry.
yeah, no, I mean, if like I try to trade in a manner where if there's like that real pullback week, right? That I'm like, oh well, the previous million weeks were great. I gave a little back, no big deal, you know. But if that declining week like makes me want to vomit, then I have too many trades out. And that vomit level is different for every individual, right? Some people have more risk tolerance than others. I'm on the real low end. So, you know, trade. But if you were to lose all your current trades, would it be okay? And if it's okay, man, keep pushing it. Keep pushing that. Push that okay level. So.
Oh, the message has to be trade the breakouts. Don't just over leverage yourself. Make sure correlation is an important conversation in this. If you have 7, 8, 9, 10 trades on and they're all in technology and tech gets beat up, you're not getting slightly beat up, you're getting smacked down. So correlation is important.
Well, and yeah, 100%. All of these are very, very important points. But at the end of the day, guys, I mean, every day there will be more opportunities, and you just got to understand where your portfolio balance comes in. I love what Hero said in the chat a while ago. When you're trading, when you're swing trading, you got to have a stop loss in place. And I know there are other ways to simulate a stop loss, but I think the simple point is have a risk management plan, have an exit plan, all that kind of stuff. But look at some of the charts here today. I mean, we looked at AMD earlier. That thing is just running sub 7% right now. If you come in on a Monday morning and you hesitate, you miss it.
Let me ask you a question.
Yeah.
In a world of zero interest rate policies for not the foreseeable future, for all of future, okay? In a world that you literally have destroyed the mentality of savings, like at this point, guys, saving in cash is not an appropriate thing to do. It's just not. You have to save money in asset classes. Okay, you have to. You cannot save money in cash. You can't do that. So in that world, I guess I'm going on what Hero said in chat. You have to find an asset class to invest in, and you only have so many of them. Because investing in bonds right now, outside of the ultra millionaires and billionaires, I don't see the bond market as a viable source for an average savings account. Right, outside of say your precious metals, and you're looking at your asset classes, real estate, stock, business, those types of things. Don't you have to save in equity?
I think so. Risk on assets, equity, companies, those type of things, real estate, property. I think all of them are going to benefit from the Fed shift that we've seen, not just the last year, but even last week, Matt. And, that was a historic, day when Powell was talking.
Don't get me wrong. I like the real estate market. I'm very, very happy the residential real estate market is held up. But I have some concerns about
for
real
2021.
estate in 2021 and 2022.
Yeah.
And so, and quite frankly, I have more concerns there than I do in the stock market.
There will be different measures of direct injection into the stock market than real estate. And I think you have different fundamental considerations for sure. I agree.
So
I agree.
In a world where we are constantly increasing the money supply rate at zero interest rate policies, doesn't that money have to go somewhere?
It does. And I think you just got to find your deals, kind of like what with Warren Buffett did over the weekend, finding companies that were going to pay him a big dividend, finding something that fits your system.
Well, that's an unfair comparison.
Right.
Well, Buffett bought a country.
But he invested in 5 firms he believed in, that are going to pay him a good dividend at a good price.
Listen, I worship at the altar of Warren Buffett. I believe in Warren Buffett. I love the teddy bear persona with the cutthroat mentality. Love everything about Warren Buffett. But he doesn't play on the same level the rest of us play on, guys. No. I mean, remember when Bank of America was paying out a 2% dividend and he got 12?
Mm-hmm.
So I would like to know how much money he was paid to buy those Japanese companies.
I want to know the details.
I want to know the details. I want to know what dividend he got.
By the way, Uncle Warren turned 90 yesterday.
Happy birthday, Warren.
Yeah, 90 years old. Pretty incredible if you think about it. Let's move through a couple of corporate news items. We're talking Berkshire right now, Matt, but we've kind of hit that highlight. AT&T is one stock that I did want to mention. Letter T, if we can. That adjunct breakout.
I was thinking on
the breakouts are on your mind, dude. I get it.
It is. It's on my mind.
Now
AT&T.
this one is an interesting story for me because I have historical context as to your perspective on this, Matt, from when these deals happened. AT&T is a company. It's not on your Deutsche Bank, Goldman Sachs, their evil list, but it's on
No, it's on my you're dumb list.
your dumb list as well.
That makes no fundamental economic sense. And what the hell are you doing list? AT&T is on that list.
The rumor is they might sell DirecTV. How much did they
Should
buy
have never
DirecTV
bought
for?
DirecTV.
Marky, how much did they buy it for when they bought
They
it?
bought it for 50 billion. If you add in
About 50 billion.
The Time Warner, it was 92 billion.
Mm-hmm. And they're trying to sell it for 2025 is what I read. Doesn't sound like a great deal that AT&T made here. You can see the stock price. I know this is a dividend paying company, and people who will pound the chest for AT&T will pound it from now until the end of time.
Listen, as someone who routinely sells naked puts on AT&T, I am so happy that they're shedding that dead weight.
I'm actually taking what AT&T is doing as a positive for their stock.
Yeah, I mean, hey, listen, you make a bad trade, right? What are you
Get
going to
rid
do?
of it.
Hold it? Cut your losses. It was a bad deal. It was bad
It wasn't
vision.
a bad deal. It wasn't a bad trade. It wasn't a bad investment. It was buying Blockbuster in 2003.
All right,
One
it
of
was
the
freaking
dumbest
stupid.
things
It
we've
was
ever seen in merger and acquisition. It literally rivals, Yahoo buying Cuban's company for 5.7 billion in '99. On the level of idiocracy, it literally was one of the worst decisions in corporate history. I mean, one of the worst decisions in corporate history. People should have been fired. Bonuses should have been recalled. It was a terrible decision. Why in the world would you as a company 4 years ago buy two traditional media companies for premium when the entire world is moving online and streaming? It made no sense at the time. It has made no sense at any point in that acquisition. And I think because of how stupid the acquisition was, and even though they're going to lose a good 25, $30 billion on the acquisition, I think if you're an investor in AT&T today, you have to say it's about damn time you woke up to how stupid of a decision that was.
I agree.
So, Marky, this is a company that you're still targeting at lower levels because
Listen,
of the dividend.
there's a few dividend companies like I rotate naked puts on: Southern, Verizon, AT&T, Pfizer, Altria. So, I don't have like a naked put on all of them at any given time, but like when I see an opportunity, AT&T, it will have its day. Dividend companies as a whole will have their day in the sun at some point in the future. They're very boring right now, right? Very boring trends, very boring patterns.
Mm-hmm.
Dividend companies go through these stretches. Like right now it's tech. There are time periods of 5, 6, 7, 8 months where dividend companies get on these ferocious trends. It will eventually happen. It's just a matter of when.
If you're an investor in AT&T, I think you got to celebrate the news. But for me, AT&T is just a company I just have zero interest in and will never have interest in again. And quite frankly, this is the same individuals that made the decision a few years ago to invest here. And are you really going to trust these individuals to make the wise, historically accurate decisions for the future that need to be made? No, whoever's on the board of directors should be fired. The CEO should have been fired. The vice president should have been fired. It was a terrible decision. It was a historically terrible decision. It will be looked upon historically as one of the worst corporate mergers you've ever seen from a what was going on in the moment time. How do you trust these individuals to make good decisions for the company? When you're an investor in the company, you are an owner in the company. You're a passive owner in the company. And how in the world could you sit idly by and be like, oh yeah, these are individuals I trust with my money?
Mm-hmm. Mm-hmm. Next company in the news, by the way, that I do want to talk about, and obviously that AT&T news grabbed my attention, Matt, because of just your history with it as well. And I knew Mark was interested. Amazon here next. And I also want to get your take on what Jeffrey's just said that I just read here in just a second. But Amazon actually got FAA approval to start operating some fleet of drones. Matt, you might start seeing packages dropped at some point in your future. I know that there's still some hoops to jump through on this, but we believe this is coming at some point where things earnings will just kind of drop that package at some location, whatever it might be. Amazon
Oh.
looking pretty good up here, by the way.
Every time I think about Amazon sending drones, I always think about Old Emory County, Utah. I
Dude.
always do. I can't wait till those bad boys and girls down in Old Emory County shoot those out of the sky.
Dude, they'll shoot him out of the sky in my
They'll shoot 'em out of
neighborhood
the
here in
sky.
South Jordan. I guarantee it.
Yeah.
I know for dude.
Listen,
My neighbor,
a
my
fleet
own
of Amazon drones coming into the areas and neighborhoods of Utah is not going to end well for Amazon. I kind of joke there, obviously, but no, I mean positive news for Amazon and what Amazon's trying to position themselves as. I don't care what the news is. Any Amazon breakout, you should trade.
It's been a very, very strong one. That weekly breakout that happened a couple of weeks ago on the stock report or the options report, I believe, was just clean, and it's been trending, and it's starting another day here. Mark, I want to get your take on something, and Matt, you as well, that I just read from Jeffries. They're coining a phrase called Monday seasonality, and
True.
they have
Go look back at the last 22 Mondays, and it's bullish. It's gotten to the point where the whole, hey, I don't like to trade on Friday, is dead wrong. Entering into trades on Friday has been extremely profitable. And whenever you have betting trends, whether it's the run up before earnings that you've seen and that you're seeing today in CrowdStrike and Zoom, whether it is the consistent trends and breakouts, whatever it is, and Monday it hasn't been manic Monday for markets in the last.
What's your instinct on that, Mark? Is that just inflows coming in over the weekend, institutions getting involved, or that they're buying up on Mondays in the context of the trend? Because I'm reading 93% of Mondays since the bottom in April have been up, so it is starting to show as data here, Matt, that at least during this stretch in the bull run of this market, Monday mornings have been very, very strong, and we're seeing that here today as well.
Or as Matt likes to joke, any day ending in a Y, right? So.
Yes, but Mondays are even more than that. There's no real statistical correlation on the other days that are this strong. 93%. I don't know.
It's noticeable.
Yeah,
it's noticeable.
Definitely noticeable.
I mean, at a minimum, like even if you're like, I'm not going to bet, even that whole I'm not going to enter a trade on Friday over the weekend, you should probably sideline that. If you see a good trade on a Friday, just because you're heading into a weekend of whatever, you should have shelved that like little hesitancy a bit ago.
That's tough. Coach Frank always says that on his Friday routine as well. He's got that. If you've been trading a certain way for 15 years, to change it in the face of short-term data, it's tough. It can be tough, even if that is compelling data, and that's where some of our emotions and our systems and our routines come in. Guys, let's start moving into final thoughts here, if we can, here on a Monday.
First, can I say about Jeffries?
Sure.
They're wrong, by the way, and what they're wrong about is not Monday. They're wrong about what the actual data suggests. The actual data suggests it's Sunday and not Monday.
Mm-hmm.
It's the futures open on Sunday that drives to the cash open on Monday. The cash open on Mondays are mixed. The data is very strong for the futures open coming into Monday.
Mm-hmm. Well, and that's also some of the most interesting data you've brought up to me, Matt, is how much of the market has returned in the after hours markets in the last 15 years compared to the actual live trading sessions, and I think it's really, really interesting when you look at that. Now, over the weekend during this rally, yeah, it's a good point. We've come in on Mondays and things have been strong. Let's start moving into final thoughts here, guys, and getting set up for the Monday mornings and getting ready for the week. I do enjoy this show whenever we come in on a Monday and start getting prepped for the week and talking about trades. I know we had a few downgrades in the sectors, Matt. I think people can watch the newsletter on that. There wasn't anything real notable or strategic, unless you want to highlight one or two of those. There was also some companies that I wanted to hit from a couple of the reports that we've already looked at. But one, I cannot believe that we haven't looked at this yet. But UPS, Coach Tyler out there was just absolutely crowing for UPS on this option report. And we are getting that high base developing up here. Nice price movement here on a Monday.
Pattern.
Yeah, it's a beautiful pattern. And that's on the option report over the weekend. But let's just get everybody's final thoughts here. Let's go with you first, Mark. What's on your mind? What do you want to communicate with our team out there?
Man, just rinse and repeat everything I've said for 2 months now. Just, keep trading, have that breakout trade, be aggressive, but also be responsible. it can be a very fine line if you don't have experience.
Yep.
Like, well, how do I be aggressive and be responsible? If you don't know, err on the side of being more responsible than aggressive. If you're experienced, you know what I'm talking about.
Mm-hmm. Maddie?
Oh, a couple thoughts. One, we're having an interesting conversation on the AT&T and whatnot, and everybody's got their perspective. Obviously, I hated that merger from the very second it was even put out there a few years ago. But the wonderful thing about investing and trading is we can all have our personal takes, personal opinions, and we don't have to look at the areas we don't understand or we don't agree with, and we can go focus ourselves on areas we do understand and do believe in. And that's what I love about the market is there's so many different tradable instruments, so many different investment instruments that we can all be right. We can all be right. We can all make money. And that is an amazing, amazing thing. And so, yeah, do I have strong opinions and belief systems on certain areas of the market? Yeah, I do. Some of those are based on my own personal viewpoint of the world and my own bias, and others are based on history and whatnot. But the beautiful thing about the financial world is it literally is for everybody, right? And I don't think we should ever get to the point where where we get emotional about it, right? I have my takes, you have yours, everybody does. But being able to approach the market in areas of the market you believe in, I think are important. I think when you invest in something, you should believe in the company, you should believe in the industry, you should believe in the sector, you should have that fundamental conviction we talk about. You can trade anything though, but that is the beautiful thing about the market is there is an area of this market for absolutely everybody, regardless of your historical perspective or regardless of your political belief system or regardless of anything that we as human beings like to create emotion out of. And so I love that about this marketplace. And so even though I might disagree with somebody's take on AT&T or somebody's take on Bitcoin or whatever the case is, that's fine. We can have wonderful conversations. We can all learn something from it. But at the end of the day, we're all trying to navigate this market and do right for ourselves and our family and our legacy. And this is a marketplace that can give that to everybody. I just love that about this marketplace. Last thoughts very quickly. It's a Monday. I'm getting into podcast mode.
Mm-hmm.
So I'm getting excited to get into the podcast and listen to Jake on crypto and have a little bit. You guys think we're no filtered here in the halftime report? You should check out the podcast. We have zero filter. Well, we don't swear. Well, sometimes Tim says the F word every now and then, but that we try to historically bleep those out. But definitely check out the podcast today. We're going to talk about crypto. We're bringing Jake on, who's been a crypto trader and investor really for about the last 5 years. And I'm interested in getting his take on things. But, regarding last thoughts on the stock market, I as always, Monday morning, I'm kind of looking at those sectors. I'm looking at kind of those watch lists in the stock report as well as the options report. And you know what? I'm not just the UPS breakout, although I do really like that UPS breakout. Agilent's breakout out of a consolidation neutrality pattern, breaking out of a very significant whole number in $100. That is something that is definitely piquing my interest. AMD is I just love everything about the breakout of AMD. Again, I'm going to repeat, you never know what the future holds. Something AMD could come out tomorrow and be like, oh my goodness, the CEO is being charged with manipulating their stock price, blah, blah, blah. We all know things happen in the future that drive price action, but AMD's history on breakouts is very, very, very strong. We don't miss breakouts on AMD. And you know what they say, Tim, when anything breaks $85, it goes to $100.
Well, 85% of the time.
85% of the time, right? And guys, if you're new to us, we are joking there. It's amazing how you have to disclaim literally everything in America right now. But I love that breakout on AMD, and that's something that had all the makings of a wonderful breakout, and hopefully we see that continuation out of AMD. I would look to maybe move up that stop loss right underneath the breakout channel here. Something like that. It wouldn't be a bad idea to maybe scale out, lock in half your profit, have a free trade. There's obviously those scenarios. Gino would say this immediately, be like, I'm taking half the position off and I have a free trade.
right? That's Gino Poor 101. He gets a good pop like this, he's removing half of the position, and it makes it so emotionally easier to let that puppy run when you lock in some of the profit along the way. So, AMD, love that breakout, but a couple others that are, piquing my interest a little bit. The Mosaic potential breakout that has not occurred yet, but I'm still liking the technical pattern coming into that. That's a cheaper stock for, those who like to look at cheaper stocks. The UPS breakout, the A breakout, CGNX. CGNX also has a wonderful neutral pattern. Let me kind of, zoom in there. Breaking out of that neutrality here. If you do close above the breakout channel, you would have to call that confirmation and trigger above the high of today with the stop loss underneath the breakout channel. That looks pretty decent to me as well. And, a very popular brand name Target here, had a absolutely awesome response to their earnings report this quarter. Gap out, run, consolidate right there at that 155 level. And then, that 9 EMA has caught up to it for the first time since the breakout. That is something that is obviously piquing my interest, especially with that intraday level of support. You can kind of see it form right above that 9 EMA right there at about 149 to that significant whole number of 150. Very easy to map out a potential trade there, both from a daily perspective from the visual identification, but also from an intraday perspective. You see that support level right there start to form. Let me highlight that. You see that support level really start to form there on the intraday right there at 150. And now you're starting to see it break out of that neutral consolidation at about 150.85. And not only that, but let me draw you a nice little trend line on that flag-based pattern. You see that nice little flag coming down right there. Let's highlight that. And you're seeing it really trying to break out of that 30-minute chart on that flag-based pattern, which I would see. I would need to see it close above that trend line for me to call that confirmation on the intraday. But I'm really starting to love what I'm seeing from the beginnings of Marty hitting that trampoline, and maybe Marty wants to get out there and play a little bit right now. So I'm also interested in Target here.
Marty reference right at the end of the show. You are in a good mood today,
reference,
brother. There's no doubt about
gotta
that.
be.
Marty makes you happy.
Are you kidding me? Marty is the mascot for tackle trading, to the point where we are literally going to be getting Marty stuffed animals.
We are getting Marty stuffed animals.
Getting Marty stuffed animals. Guys, get excited. Pro members, get excited.
Would you want a Marty stuffed animal out there, by the way, with the tackle trading logo, little elephant on your desk?
Pro members.
Would you like that, guys?
I'm going to be sending pro members. Tim's fighting me on this. So you go at Tim. Okay. This is not going at me. You go at Tim. I am going to be putting a Marty elephant to every pro member. I'm just putting in the parameters. So all pro members, do you want a Marty the elephant? Do you want the mascot? Who wants the mascot? Tim's just waiting.
Are these going to be stuffed animals, or are these going to be like little figurines?
No,
we're looking at stuffed animals, Cody. Kind of yeah.
If it comes with the tramp.
If it comes with the tramp.
No.
Oh, that'd be a cool little kid's toy where it bounces up and down.
Oh, and my 11-year-old daughter is the one who's picking out Marty the elephant. So
yeah,
you can get one of those pins with the trampoline on the bottom. That way you can go up and down as you move the pin, or when you click it, it jumps up.
None of you guys can offer me suggestions on Marty. I won't listen to it. I'm highly emotional and opinionated on Marty the elephant. I will not listen to any logic or rationality in this conversation.
Well, I'm glad you just bringing that and admitting that up front, so that I don't have to point that out to you later.
At what point have I ever had a problem admitting my own internal bias?
Oh, Marty.
You're wrong. That's how I admit my internal bias.
That's the admission. All right. My final thought is very, very simple. That Chadwick Boseman news over the week, was very, very tragic. Just practice daily gratitude, guys. Empathy. You never know what somebody's dealing with out there. One thing I love about our community is we're incredibly positive people that like to come together and share ideas and embrace each other and grow together. And, life is not guaranteed. Coach Emily posted something on her social media about her son being inspired by him. And it just grabbed my attention, kind of pulled at my heart heartstrings here this morning. So just daily gratitude, empathy, and I'm grateful for you guys. I will tell you that out there. We love you guys in Team Tackle. There's no question about it. We appreciate you. And we're going to keep putting out good content, being honest with you guys, helping you guys just here. We're going to be present. And that's what we need in this world is community and to be able to come together. So if you are a member of our community, we appreciate you. If you're new, welcome. We're going to embrace you. And education is always first before application. That's our motto. That's the way that we think about teaching people how to trade the market. So,
Tim,
yeah.
And I just want to say one thing. That was such a sad story.
Yeah.
Such a sad story. And in these moments in time, it always makes me want to celebrate life, right? And in this environment where there's a lot of angst in America, I'm not going to buy into it anymore. Just not. I'm not going to let the negativity get me down.
Yeah.
There's a lot of things to celebrate about America. There's a lot of things to celebrate about who we are as a country. There's a lot of things to celebrate for who we are and what we represent to the world. And we're all going to go through moments in time where we see things that we disagree with, but I'm personally going to celebrate life, and I'm going to celebrate the positive of humanity, because in our darkest times, humanity finds out who they really are, and usually we overcome. Yeah. And we will overcome anything that comes at us in the future as well. So, I'm going to, at least in my own life, I'm going to try to celebrate people's vision and passion in life, and not just get reminded of it when somebody great passes away.
Mm-hmm. Yeah. Well said, brother. I agree. And that is the mindset that I want to embrace as well. So everybody out there, appreciate you guys, and appreciate you, Matt, Mark, and Cody, as always. We got to get in podcast mode. It's time.
Hey, I'm excited. Listen, I love it when we have a guest on, and Jake's such a nice young man, isn't he? Oh, such a nice young man. And I always love it when I can sit back and just be like, I'm going to learn something. And so I'm really excited for the podcast.
I just am looking forward to getting Mark to not trade GBTC.
Oh, that's not going to happen. So I mean, come on, we got to set your expectations right.
Listen, my expectation is for you, if you're going to embrace crypto, to embrace crypto.
First, you got to get it correct. I trade Riot.
Oh, I was going to say Riot too. I was going to say Riot too, but
he trades Riot because he likes saying Bitcoin kicker.
Yeah, I know he does. I know he does.
It's got a little Bitcoin kicker. All right. All right, guys, we're done here for today. We'll see everybody back here tomorrow, same time, same station. If you've not done it yet, there is a trial link to our pro membership in the comments below. 15 days free. Come and see what we do over on the back end to tackle trading within our community. We're out today.
Team Tackle, you guys are the best. We'll see you tomorrow.
See you tomorrow.